lots of people coming in. Perfect. Welcome, Josh. And
Hello, live and in color, right?
yeah, exactly. 3D, but two-dimensional, really. Cool. Well, we're going to give everybody about one more minute to jump in. We had a ton of registrants and lots are here, but yeah, I want to give people just one extra minute. I'm finding people are booking themselves back to back a lot of the time to really maximize their day in this, when
No
they're
doubt.
set up like this. So let's give them one more second. Just a little bit of intro here. My name's Adam Krupp. I lead product management here at Textata. I've been doing all things rental for about 8 years, not nearly as long as Josh, but excited to be here, kind of moderating, co-hosting, supporting as we're going through here. We also have Matt here, who's from our marketing team. He's going to be helping us with some Q&A. So at the bottom of your box there, you'll see a Q&A box. We don't have the chat active on this one, but we do have the Q&A. So feel free to throw questions in there. We'll use those kind of at the end of the session or ad hoc through the conversation, kind of as we're going through. But yeah, with that, Josh, you want to introduce yourself a little bit and kind of where you're coming from, and then we'll kick off.
Yeah, sounds great. Thank you so much. So Josh Nickel, I'm the Vice President of the Equipment Segment at the American Rental Association. My grandfather was in rental. My dad was in rental. I swore I was not going to be in rental, and yet here I am. Turns out it's a pretty good place to be. I've been in the industry for a number of decades now. I can count them in decades, which is terrifying to me. But I had my own equipment rental company in the Atlanta, Georgia area, had a number of locations. We were listed by Inc. magazine as one of the fastest growing independent companies for 4 years in a row, and then strategically acquired by Sunbelt. Spent a little bit of time with Sunbelt and then moved overseas to work in rental software for a couple of years, moved back to the States in 2020 when the world collapsed. Had been a volunteer for the association for most of my life, and then had the opportunity to join to represent our equipment members. So that's what I do now. So I get to represent equipment rental companies on everything from workforce development, which I know we're going to talk about today, technology, certification standards, advocacy, and have lots of fun conversations with folks like yourself like this. So I'm excited to chat. I'm a super open book. I know we're going to have some Q&A today, so encourage any and all questions, even if they're not, exactly within the confines of what we're talking about today. I'm happy to dive into pretty much anything.
All right, awesome. Well, just to get a little bit of context around who's in the room here, I'm just going to launch a poll here. So the first topic we're going to be talking about is around shortage of equipment. So with that in mind, little poll here around what's kind of the average wait time you're hearing right now from you're looking to get a piece of equipment. What's kind of the wait time that your suppliers are telling you you're gonna have to do in order to get some fleet. I think I've heard everything from there's one piece of equipment the other day somebody was saying was they had like six-year backlog or something, and it was specifically it was related to some backup power for data centers. But
Oh yeah.
cool. So we've got we'll give it one more minute here to get a couple more responses. I see them coming in.
I'm just excited to see that somebody has already said immediately available. I would say 6 months ago, that wouldn't be an answer that anybody would give.
Yeah.
Luckily, it seems like things are starting to lighten up and get a little bit better. To your point, it's super category specific.
Yeah.
If you want a 180-foot boom, there's only so many of those that exist out there, and they can be really hard to come by. But some categories are becoming relatively immediately available. And I think the other thing that we were talking about the other day that I thought was interesting is how differently different manufacturers and different dealers have handled the shortage of equipment. On some level, it was kind of funny when the shortage first started and we really started to see things get pretty tough in early 2021. I would have members call me and be like, "Hey, Josh, I can't get this piece of equipment, and what can you do about that? I need you to make them make equipment faster." And I kind of laughed with them, and I was like, I really think that if they could sell you a piece of equipment or they could make it faster, they'd probably do that because it's in their best interest to sell you equipment. It's not like they're holding back on equipment on purpose. It's just a number of things created so many complexities for our manufacturers. There was a period of time where you couldn't even get a mini excavator in Europe. And so it's just really, really tough. And manufacturers have worked really, really hard to try and deal with production, ramp up production. And I think that's going to create its own interesting issues, which we might get into as well. But I think they're getting back more towards that. Now, in the process of that, they've all handled it differently. We have some manufacturers, I'm not going to name any names in any of these, but some manufacturers who have prioritized their largest accounts, and these are businesses that make sense in some cases. So they prioritize their largest accounts, maybe the largest rental companies. Others have prioritized smaller accounts. Others have kind of gone 50-50 and said, well, we can't supply all the orders. Let's say we have 10 that we can sell and everybody ordered 2. We're only going to give them 1 of the 2 that they ordered. It's really run the gamut. And then in some cases, the industry just lost out. I had a friend who placed a humongous order for a bunch of off-road utility vehicles for job sites. And the company came back to him and said, listen, we'd love to fulfill this multi-million-dollar order for you, but we're selling golf carts like they're going out of style. And those are much higher margin than us selling you all of these. So I'm really sorry, but we're not going to make those for you. And we're not going to make them for the foreseeable future. So it's just a kind of a really unique time to live through. But I don't think that that's something that will continue forever. And I think we're starting to get to the point where that kind of stuff is changing. We did a poll of membership, and when we talked to those equipment members over the last 2 quarters, we have seen some lightning. So, for example, back in, let's see when this was, the end of the second quarter, a lot of our members were saying fleets are still getting older. 35% of members said fleets are still getting older. 40% were saying that they're staying the same, but 25% were finally starting to get younger. We've been watching the average fleet age of rental companies go up and up for, really the last 3 years. And so I think we're starting to see stabilization and at least a movement towards a return for normal. What that normal looks like, it's hard to say, but I think that, a couple of years from now, the discussion on availability is going to be quite different.
Yeah, absolutely. We've got a question here from the audience, possibly around like the shortage of delivery. They're wondering if part of the shortage is due to parts coming from foreign countries, China, Russia, etc., and kind of how that may have impacted some of the equipment shortage.
That's a great question. So parts, and I think we have to break parts down into a couple different things. So we've got parts, we've got silicon chips that are used in an amazing amount of things. And I think some of it's different. So with parts, it's kind of like going back to that decision that manufacturers were having to make with which customer do they serve. They were trying to figure out, where do we put our parts, and in some cases, manufacturers were saying, well, I'll pull it out of the parts building line and I'll sell it to a customer who needs it. But now that's a new unit that I can't finish producing. There's lots of equipment sitting out waiting for a couple parts. In fact, there's some really famous pictures of the Tesla factories with just thousands of Teslas sitting out there in a parking lot that were like 98% done, but missing a few things. When you start talking about silicon chips, especially for a couple of years there was a real issue, and it was far more to do with stuff outside of our industry than it was inside of our industry. And, from an advocacy level, we've been talking to a lot of folks in Washington about reshoring some of that. We're seeing a lot of huge investment in that, which is going to be great for rental because they're going to have to build these giant factories, which we love. But it's going to make some of that more readily available. And then parts, some of the parts, it depends on what type of part it is. If it's a commodity part that can be built faster, cheaper, and easier in a place like China or Russia, then that certainly impacted some things. I don't think that Russia in particular is having a whole lot of parts impact right now, because I don't know how many of our manufacturers that the traditional rental company is buying is getting a lot of parts from Russia. But any kind of complexity that you're adding to a global ecosystem, when you're talking about equipment and construction equipment, it's a global ecosystem. Any shock to the system is going to create complexity. So we don't want any of that. but I don't think that those things are having major impacts. And I think that a lot of our manufacturers are diversifying away and reshoring a lot more so that they don't run into some of these supply chain issues, which, to be honest, for decades worked really well.
Yep. No, absolutely. The factory shutdowns, the logistic complications, the like demand spikes that people didn't see coming with different types of equipment, definitely all affected that as well. And yeah, you talked a little bit about how fleet age is being impacted, but kind of what are you seeing happening to like used equipment, both prices and availability, kind of as a byproduct of the lack of ability to get new stuff?
So we definitely have seen used equipment become incredibly valuable, especially I would say about 12 months ago. There's a lot of things that you could buy, from trucks to excavators. And if you actually got one that shipped to you, you could sell it for more than you paid for it. The problem is you really needed it, especially if you were a rental company. You really needed it and you really needed to rent it. And so it was kind of a painful proposition to own this stuff that you could turn a profit on if you were a sales organization almost immediately. And I think it made it really hard for a lot of dealers with rental fleets, because they were even, in a weirder position because they really do both. But I think for your traditional rental company, they had to hang on to the stuff because they knew their customers needed it. We were at record levels of time and dollar utilization for many rental companies. And the return on investment of continuing to rent it and supporting that customer was better than the short win that you might get for selling used equipment. It's starting to stabilize, though. Used equipment prices are starting to come down. I do think you're going to see some interesting things happen with used equipment prices over the next year or two. And I think it comes from a couple different areas. One, and I hate to say this, and I don't mean this in a negative way. I guess it is a little bit negative, but the equipment that was built in late 2020 and early 2021, I just don't think is going to be the same quality as the equipment that was built 2019 or probably right now. I mean, there were so many complexities with labor. There was such a rush to get things out. There was such a switch of, well, can I use this part or this chip or that instead of this? And we've seen it in previous cycles too. So I don't think that year model is going to hold its value as well as some other year models. I think you've also got rental companies who've beefed up on fleet that now are going to be able to start to unlock some fleet. And so I think you're going to see used equipment prices coming back down. Now, I say that, but I think you have to take it with a grain of salt, because I don't think that all of a sudden they're going to crater. I think they've been overinflated. Used equipment was worth more than it really should be worth. And so now we're going to see prices come back down to what I think we would normally expect. And then on top of that, you've got the cost of equipment has gone up. So that drives up the cost of used equipment as well. And that will continue to be a driver to keep it over, I think, historical levels for a little while.
Yeah, I definitely saw a lot of that where, yeah, sometimes, like you said, the used price was greater than what they paid for it. Again, lots of chatter in the rental groups about, yeah, fleet, up 20%, 30%, 40%. Hopefully both the new equipment prices come back down to earth a little bit, because we've got to keep the margins there in order to keep the lifeblood of the business going. So,
well, and to that point, I think that, real quickly, I think that is something that we're going to see in the next year or two. Usually when you look at these types of macroeconomic cycles and how it affects construction equipment in the industry, there's periods of underproduction and then there's periods of overproduction that follow that. And the amount of overproduction is usually related to the pain of the underproduction when we were underproducing the amount of equipment we needed. This was really, really painful for a lot of manufacturers. And so I think a lot of them have ramped up an incredible amount. And, it'd be interesting to see, but I think we're going to have a lot of overproduction because of that. And so a year or two from now, we will see the return of discounts. We'll see the return of paid down interest rates and paid down financing. And so I think we'll get back to a different place where when you're talking to your sales rep where you're buying equipment and they say, well, if you don't buy it to that price, somebody else is going to, and I'm sorry, I just raised the price on you, to, we got a couple sitting on the lot. Maybe we can make you a deal on this demo one, or we're running a special if you buy in December instead of waiting until March of this year. I think we're going to see the return to normality of some of that stuff.
Yeah, I remember at the ARA in 2021, which I think was Vegas, a lot of customers we were talking to on the floor were like, we're seeing equipment, but we keep being told we can't have it. So it's a typical difficult experience there. And one of the customers I was talking to, again, they were one of the larger ones. They actually went and used their capital that they would have spent on buying new equipment, and they're actually buying other rental companies, because
Mhm.
they're like, they have the fleet we need. Like, we have the demand. We need their fleet. And part of that came with, they came with mechanics, they came with drivers. They're like, we don't want to lose anybody from this operation. Sometimes, when mergers and acquisitions happen, they lay off swaths of the team, but they're like, no, we need all of them, to be able to keep running our business as we're growing, especially with those demand cycles. And it kind of leads into kind of our next topic, which is around the skilled labor shortage.
Mhm.
I was talking to customers even this morning. They were, I was just checking in, seeing how things were going, and they talked about the skilled labor shortage. So, what ideas have you kind of seen implemented to be able to bring forward, close those gaps and be able to keep your business running?
So I want to key off with something that you said just a second ago, and then I'll answer the question that you just asked, because I think
Sure.
it's really unique. We had more members acquired by other members last year than the previous 5 years combined. So that
Wow.
includes pre-2020 years. I mean, it was just amazing. But it was very much to your point. When you acquired somebody else, it gave you the ability to grow geographically. The rental industry was incredibly strong, but you got fleet and you got people. And those are two of the hardest things to get, and one of the things that is, I would say nice on some levels in the rental industry is when you acquire somebody, if you're a strong, high quality acquirer, all your changes is the logo on the t-shirt, the name on the sign, and the decals on the equipment. Everything else stays the same. The fleet stays the same, the people stay the same, the relationships stay the same. And so that really accelerated that. Juxtapose that, though, we're actually at record levels of equipment rental membership. So there are more equipment rental company members of ARA than there ever have been in history. So the industry is still growing, even despite that acquisition cycle we've seen. But to your point, that you made earlier, it has been really fascinating to watch that acquisition cycle. And then as far as people, and attracting people, I think that there's some things, and I'll mention a couple of them in a minute, that we can do specifically right now to be better at attracting people. But one of the things that we're struggling with is really a generational issue. And it's something that we talk about with, our peers in the industry. And a peer for an association is other associations. So associations like AEM, the Association of Equipment Manufacturers, and AEMP, Association of Equipment Management Professionals, and ABC, American Builders, all those groups, they're dealing with the same problem.
Mhm.
It's just not sexy to become a mechanic, in the way that it needs to be. And so on some level, a lot of us are working together and talking about much higher level things to try and take a younger generation so that we create a pipeline 5 or 10 years from now. That's not a problem that gets solved today. We can't just
Yeah.
make a bunch of mechanics appear. But so for example, one of the things that you're actually going to see from us in the next, I think it drops in about a month, is we landed the second season for a television show called Jobs of Tomorrow. It's on Amazon Prime and Tubi and a bunch of other channels. And season 2, I think it's 8 episodes, is all about jobs in the rental industry. And it's a high production, true television show. I don't know if you've ever landed on Discovery at when you're just sitting there and all of a sudden you're like, I had no idea how much I wanted to know about suspension bridges. And 30
Mhm.
minutes later you do. It's kind of like that, but it's for jobs in the equipment and event rental industry. And, it talks about sustainability and the sharing economy and all these things that we think really speak to younger generations and would attract in the industry. So that's what we're doing on one side, is saying, there's a lot of people who were born for this and they're missing out on it. And how do we cross the line for them with that? On the other end, there are tools that we can use right now. One of the things that I would direct people to, and I can put it in, I don't know if I can put it in show notes for this, or I can have you guys send it to people afterwards,
Yeah, we
but we've
definitely
got
send it
a
over.
checklist. Okay, perfect. So we've got a checklist that you can go down that lists all of the places that you should be recruiting from in your local area. And I have not sat down with a member before who is doing every single one of these. So some of them, for example, are, when's the last time you were at your military recruitment office, or your local military base? There's so many people coming back into looking for skilled work from those programs. When's the last time you visited your local high school, your local vocational school, your local trade schools? There's a mechanic out there who went to trade school and they thought they wanted to be an auto mechanic because they really like cars or they grew up messing with them. And then they're sitting there going, this is kind of boring. And there's a type of mechanic who loves that repetitive checking off the box thing. But there's that other mechanic who likes to smell the engine exhaust, feel the vibration, taste the engine oil, diagnose something, figure it out, and be creative. That's an equipment rental mechanic right there, and when's the last time you were at a tech school saying, hey, we've got jobs where you can be creative and you can do something different today than you did yesterday? Re-entry programs are a great one. I had a number of people on my staff who were re-entering the workforce and had made some decisions that maybe weren't the best decisions and ended up in places that were not awesome because of it, but they were trying to work back into society and be a contributing member. I talked to just today, actually, a group in Alabama that is graduating 60 mechanics a quarter in a re-entry diesel mechanics class. So they're coming right out with the skill sets that we need. I mean, there's opportunities for stuff like that. Local and state organizations, just a ton of places. So I can share this checklist with you guys, but I bet there's probably something on there that you haven't looked at or haven't been considering yet. I'll pause there though.
Yeah, no, I think representation of cool jobs and what they can be is definitely a big challenge. We definitely don't need another generation of YouTubers. We definitely need skilled trades to both be servicing our equipment, driving our equipment around, and getting the fleet moving, because that's what builds the world. So definitely glad to hear about that the TV show, and I know I'm going to check it out. So also help my kids understand what I do, because people don't realize how big the rental industry is, when until you're in it. So that's really cool. So we talked about like how we can do more recruiting, but let's say we find somebody either they're earlier in their career, or maybe they haven't been able to go to school yet. What are some opportunities companies can be leveraging to take, start in the yard, washing equipment? Maybe they can start doing oil changes or other things like that. How can we help our customers like upskill, or what are you seeing around those types of programs?
Yeah, so this is another thing that we think a lot about, because nobody really, I think, grows up thinking I'm going to get into the equipment rental industry. They kind of fall into it somehow. They've got a relative, they applied for a job, they just bumped into it. Yep. They grew up on a farm working on equipment and thought, hey, I can do that somewhere else. So, once you get that person, then it's upskilling them, and keeping them in the industry. And there's a number of things that we're doing for that. One of them is we launched our first certifications for entry-level employees in the last year. So we have one for service technicians and we have one for sales and marketing. They're true certifications. You get a certification at the end. It takes about 40 hours of coursework to do it. It's broken up into small pieces so anybody could go through it. But at the end, they have a true rental education. It's not something that we threw together from other organizations or other education. We got out into rental stores, filmed and photographed and took their best practices, and then are taking that so that we could give people an easier way to start. I mean, in the equipment rental industry, mentorship and apprenticeship is always a big one. But you can then layer this on top, so they're getting kind of industry knowledge and they're laying that on top. The other thing is creating more job portability. A portable certification helps, because if we're giving them a certification, it kind of connects them in a way to the industry. But also the job portability past that, we launched what we call a job portal, because it's really more than a job board, in the last, 2 years now. And I call it a job portal because really it's a place where members can go and put a job, and then it goes out to monster.com, military.com. I think it's over 100 different job boards. So it's really a simple way to post in a bunch of different places, not just an ARA job board. But it is also the ARA job board. And that's a way for, you work at the local rental store, but for whatever reason, you need to move back to, let's say, Seattle to be closer to family or something. We don't want to lose you in the rental industry. We need a way to keep you connected and show you, hey, you like working here, you like working at this. Here's a place just like that in Seattle, Washington, that you can go work. So creating that portability that you see in other industries. So you have a certification that keeps you connected. You've got a job portal where you can find jobs anywhere in the country doing the same thing. And then it's continually thinking about how do we increase our employee engagement? How do we make this a great place to work? I think all those things are critical. And I know a lot of other businesses do that, but we've got to do that really, really well, because we've got to keep these people in the industry.
Yeah, absolutely. I definitely see, 5, 10, 20, 30 years of rental matters. Like, there's definitely a expertise to it. When you've done it well. And being able to bring somebody on board who's done it before is definitely super valuable. Back when we were running equipment rental operations, we definitely saw that through, time to value of, how productive they can be, how soon they can be productive. Definitely just every little bit helps. So it's really cool that you guys are supporting people in the rental industry, even if they move. That's awesome. Have you seen, like you mentioned, like mentoring to get into the rental business? Have you seen any like successful mentoring programs within an operation between maybe like the 30-year diesel mechanic and the guy who just graduated? Any tips or thoughts around how they can get some improvements within the operations that way?
Yeah, I think anytime that you can cross-pollinate new people, it's always good. Your people in a lot of cases are going to start as, and depending on what you would call them, a service technician, a yard person, somebody who washes and greases and cleans equipment, and they're kind of going to grow up from there. So I think it's really important to take that person who you're really sticking in a dirty, hot or cold, depending on the season, job, and then showing them what a career looks like. If you just stick them there and let them cut their teeth and just wait for them to advance, then I think you're going to lose, especially younger folks these days. You definitely want to be taking them and exposing them, giving them time to work alongside a mechanic, giving them time to take certifications, giving them time to go to a engine school with your preferred manufacturer and upskill them and let them see that career path, because you can make a ton of money without any college debt in the equipment rental industry being a mechanic, but they've got to see that path. So I think it's kind of sprinkling that in that, yeah, they're working 40 hours a week in washing and greasing equipment because you got to do it and it's got to get done. But, maybe a couple of those extra hours that they've got, you're making sure that they get some time with a mechanic to help them out, even if they're just an extra set of hands, which the mechanics need occasionally anyway. So I think you've got to make sure that those younger people are getting the opportunity to participate with some of your more experienced staff.
Yeah, I think you mentioned the word like career and job in there, and I think that's a great point. Is showing them that yes, they may start with a job, but that they can build their career within the rental industry as well. That there is a path to good jobs, good income, stable. Rental industry has been historically very very robust and kind of does well when the macroeconomy goes down and when the macroeconomy goes up. So opportunities on both sides of that swing. So
and that's actually one thing that we put in, and somebody asked about it just a second ago. We put in the Jobs of Tomorrow television show is rentals growing faster, 2 times the speed of the construction industry, because it's really part of this more circular sharing economy. And that matters, because if you join an industry that is stagnant or worse, shrinking, you're waiting for the person ahead of you to retire, to move up, to do something else, to move out of the organization. When you're joining a rental company, in a lot of cases, new rungs on that ladder are being created daily. And so there are more and more opportunities. So you have so much more opportunity to advance when you join the equipment rental industry than when you join an industry that is not dealing with that same kind of opportunity or tailwinds, not headwinds, but tailwinds pushing the industry along.
Yeah, and it's on us to get the word out about that opportunity, because like we are a bespoke industry, we are a niche, and yeah, we gotta do the work. Kind of as we're shifting a little bit to our third topic, which is adoption of technology. We see, we're hearing from customers that there's all kinds of new expectations from contractors, or again our rental customers, their customers. What are some of those new expectations that maybe weren't there pre-COVID? COVID was an accelerant for many things. What are you kind of hearing out there in the market?
So I think this is something that rental companies really have to pay attention to. Business has been, let's say it, easy for the last couple of years. I mean, it's still hard work, but the customers are just showing up. You're at record levels of utilization. But I do think that, we're getting back to a more normal world, and that normality is also going to be a lot more digitized than it has been in the past. I was talking to one of our members this morning, and they were just talking about their website and whether they should invest in it, how much they should invest in it, what they should be thinking about or doing. And, some of the things that I think you have to be careful about is you need to pay to play. And the customer has a different expectation now than they did even in just 2019. There are so many contractors who I think were laying in bed at 10 o'clock at night at the end of 2020 and like, oh, I forgot my cutoff saw for the job tomorrow morning. Let me go ahead and reserve one on my phone. And we're like, that's really nice. It's still a relationship building. It's still a sales business and a direct sales business. But not everything has to go through the salesperson. And I think a lot of contractors who were not quick digital adopters either have gotten much more on the bandwagon that they want a digitized experience too. I think it's also something that you have to do just to show up. So maybe a lot of your customer base isn't going to reserve online, but it doesn't mean that they're not making decisions based on that. So for example, I know back with my equipment rental company, when I'd go out on a job site and I would be to try and win their business, I had to convince them that I was large enough and I had a fleet that would be able to properly serve them. Now that varied based on the size of the contractor, but there are a lot of contractors who would look at me and go, well, I work all over Atlanta. You can't serve me because you're an independent rental company. And I assume that independent rental companies are small. And I had to immediately try and overcome that and say, we've got locations all around Atlanta and we have these giant fleets and all this great stuff to serve you, Mr. Contractor and Miss Contractor. And I think that your website is going to be kind of the same thing. If they go to a website and it doesn't look clean, it doesn't look modern, maybe they're not going to order, but they're also going to look at it and go, I'm not sure that this is a modern company. I'm used to an Amazon experience. I'm used to a Shopify experience. I need something that looks clean and interesting and like really engaging. And we actually see that in our survey results too. So we surveyed contractors at the end of last year. And while there's some amazing news of 99% of contractors expecting to rent in the next 12 months, and that's of all contractors we surveyed. We didn't go after contractors who just had rented before, who were interested in renters or renting. We went after all contractors. What do all contractors on average think? And 99% we're going to rent in the next year. 45% we're going to increase their reliance on rental in the next year. 43% we're going to stay the same, and only 2% we're going to decrease their reliance on rental. So contractors are there for rental, and they're increasing the reliance on rental. We see it in rental penetration at the same time. The thing that I think we have to be careful about is how they're renting and how they're making those decisions is changing them. So when we look at those same contractors and we look at them over time from 2019 until 2023 on multiple versions of this survey, and we ask them, how are you renting? When you're renting most frequently, how are you doing it? And like I said, it's an in-person business. In-person has gone down every time that we have done this survey since 2019. What's gone up? Online website, email, text message, mobile app. What else has gone down? Phone. They're not calling you as much either. And then again, it's not to say that relationship isn't important with the contractor, but the relationship is made, and then the efficiency of digital or digitization needs to be taken into account. And then to kind of further drive that home, some other things that have increased since 2019. Visiting rental stores has gone down every year. Internet searching has gone up every year significantly. Visiting a rental store's website has gone up every year significantly. Social media has gone up every year. Calling rental stores has stayed flat. And then the last kind of set of statistics I would say in this realm is when we ask them what types of things are most impactful to their rental transactions, over 50% said they wanted to find their equipment to rent online. Almost 50% wanted to schedule delivery and pick up online. 40% wanted online and digital quotes. 40% wanted to complete their rental transaction online. 35% wanted to pay their rental transaction online. I mean, that's a huge percentage of people that are already moving that direction. And so I think if you're not investing in that and providing that kind of experience, you could get left behind. So I think it's really important to be investing in your technology, especially your customer-facing technology. But I think we could also pivot that back and then talk about why we need technology to deal with the equipment shortage and the people shortage too, because there's two sides to that coin, right?
Yeah, no, definitely. That sounds like a ton of great insights. And we got a question in here. Is it possible to share the survey? Because, this is a lot of insights into our customers' core user base, right? Their core demand gen. So,
yeah. If you're an ARA member, it's absolutely something I can share with you. We do quarterly webinars on with Rentalytics and some of our other products, and it includes these survey results. But happy to share it with you or run through the results with you one-on-one, if that's helpful.
All right, awesome. Well, that's really good. So we talked a little bit about like online renting, or at least being able to see equipment online. Is there any other trends you're seeing the top tier of equipment rental companies leveraging or doing to make it easier to transact, easier to rent equipment, easier to service equipment? How are they leaning into technology?
So I think that that takes us to the other side of the equation. There's the customer facing portion, which is about, lead and demand generation and making it a great customer experience. But I think we've got to think about the same things with our people. There's a lot of waste in the equipment rental industry, at least there is historically. I know some very successful people who are my friends who will walk out to the second floor of their rental store and look out at their fleet, and that's how they make their buying decisions, their selling decisions, and their pricing decisions. And that's just not effective or efficient anymore. We've got to be able to move faster, and we've got to be able to do it better. And we've got to be able to automate some of these processes. It is too hard to train people to do some of this. It takes decades to get the intuition to be able to do that and look at your fleet. And that's not scalable. But creating process and using technology to do that is scalable. And so we've got to do things that allow us to utilize our fleet more efficiently and utilize our manpower more efficiently. Having worked in rental software myself and been a user myself, I know that most equipment rental companies probably don't use half of the features available to them in the stuff that they already pay for. So one of my first recommendations is always to call your current rental software provider and hire them to come out to you in person. And I know that sounds expensive, and train you on using the stuff, because rental is so complicated. When a rental software company implements your software, they're training you to do the bare minimum. Now, that bare minimum is incredibly important. I mean, writing contracts is 80% of what your staff does. And so if they can't do that really, really well, then it's not going to work at all. But there are so many things beyond that that can improve the customer experience, the staff experience, improve efficiencies, that are too hard to teach somebody, usually up front, and take continued learning, not even counting the fact that rental software companies are always improving their software. And if they're improving their software, there's probably new features that you're not taking advantage of. So I think that it's critical to utilize what you've got. And then, we could certainly talk about some ideas on top of that, but I'll pause there for a second.
Yeah, it's very true. And yeah, it's like you said, they're constantly evolving. Definitely makes sense for us. And the deeper we go with the customer, the more conversations we have, the more like, I wish you guys could do this, and be like, well, you can. This is how you do it, and there's so many things that's there that definitely just need to ask. So definitely that's a good insight here. So you mentioned a little bit around the efficiency of the team and how to be more effective that way. I think we did a webinar, I think 2 webinars ago, specifically on work order management, and as part of that research, we found that the mechanics were able to do 20% more work orders per day just by using a mobile one. And that's on top of the fact that, they're more efficient in ordering. They're not having to have an entire employee just sitting there typing up work orders into the system if they're doing them on paper. So that, yeah, definitely see that in our customer base as well, going from that side. So we got a couple questions in here. We've got 6 minutes left in the time we had. And we've got a couple questions. So there's a couple on fleet here. First one, again, what were the typical margins on used fleet prior to COVID, and how did they increase in the recent environment, or any thoughts on that?
So one of the things we have to be careful about as an association is talking about pricing. So I have some constraints when somebody asks about margins or pricing. That being said, how somebody even calculates margins, particularly on used equipment fleet,
yeah, I was thinking that too,
would vary so incredibly that, I couldn't even take a stab in the dark, other than saying that the end retail price went up, and so the margin increased. So the typical margin was much higher, and is probably coming back down more towards earth.
Yeah, well, that's definitely true. Another question here back on the fleet side. So traditionally, rental companies would defleet their equipment around 5 years. Are you seeing that's still the case, or because the equipment shortage has that timeline changed?
It definitely has. So I would actually say that our average fleet age is a little bit older than this person mentioned. They said 5 years. 5 years is definitely when we start thinking about selling something. But when we look at the average fleet age over time, really the average fleet age is about 3.5 years. So 3.5 years means that you've got new equipment in the fleet and you've got equipment that's 7 years old in the fleet. And so you're selling it at an average of about 7 years if your fleet age or your average fleet age is about 3.5 years. So I wouldn't say 5 years, I'd probably say 7 years is a little bit more common. Now that changes categorically. You know, we all know you can take a warehouse forklift, sand it down, repaint it, and it works like new for the next 20 years. You know, and there are other categories that you might as well throw away after 3 years. But on average, it's 3.5 years. We've seen that move towards about 4 years, which means the oldest equipment is 8 years old on average. And then you've got new fleet in there. That we think is relatively temporary, and that's being driven by the shortage of new fleet. I think that you'll see that move back towards the 3.5 year place. And then they mentioned depreciation in there as well. I mean, you've got tax depreciation, which doesn't really change. It's whatever, you know, whichever version your accountant's using. And then you've got true depreciation. And true depreciation is really a factor of how much are you using it, what brands are you buying, how are used equipment values going. So the true depreciation on a piece of equipment that you're selling in 2021 was probably much lower because the amazing rates you could get to sell it, but you also might not sell it, you run it longer. And so some of that's really kind of hard to answer that way.
Yeah, no, that's really true. All right. Any last questions you guys have? Please throw them in the Q&A there. Yeah, any final thoughts that I didn't tee up for you, Josh? Any last moment? Yeah, any takeaways you want for our audience here today?
Sure. I think one other thing that might be interesting is, I think real world stories help. And I think that, or I know I have to be careful as an association staff member promoting any one company or any one product. I can't, in fact. But what I can say is I did a study back when I was a rental store with a company called SmartEquip, which most people know, where we actually went through and looked at the return on investment for process improvement. And I would consider myself a little bit of a technologist, which is why I worked in rental software. I love technology, and I was really slow to adopt digitizing my parts ordering process. And in fact, I wasn't going to until a friend really pushed me to do it because they wanted to study it so that they could release it to the association and release it to the industry. And I can share a copy of this article with the actual results that we came down with. But I was embarrassed. I didn't think it was a fire worth me putting out at the time because we were growing so quickly. And the return on investment was insane. The published return on investment was 1,000%. It was actually a little over that. And we took it down because it was unbelievable. And so we took anything that was squishy out of there. Like, for example, if you fix a piece of equipment faster, then you should be able to get more time utilization on that piece of equipment. Took that out. A mechanic might cost me this much, but the real cost that I would charge a customer would be higher. We took that out. Some of those things. But when we go back to labor, I think one of the most critical statistics that I think would drive somebody to think about, well, maybe technology does have a return on investment. It's not just squishy. Is we had an 85% reduction in staff time per service that was required. So it took us on average 60 minutes, which for me was mind-blowing how long it took from okay, we know we need a part, finding the parts manual, logging in to actually get the part for that piece of equipment, ordering it from the manufacturer, somebody paying for the part, maybe an approval for the part. It was like a 30-step process, and I felt like it was 3. Our average part ordering process went from 60 minutes to 6 minutes by digitizing the process. I mean, when you're talking about mechanic time, you can't buy more mechanic time. There aren't more mechanics out there. But if I can take you from 60 to 6, it's amazing.
That's awesome. Yeah, there's definitely many parts of the rental operations that can be sped up through digitization. Yeah, that was another one of our previous webinars was around the opportunities of digitization. So thank you so much, Josh, for joining us. Thank you so much, audience, for all the questions. It's been awesome. We are at time here. So hope you learned some things. Hope you got some new ideas and some takeaways on how you can be more effective and efficient and grow your business. So we'll talk to you guys next time.
Thanks so much for having me.
Bye, everyone.